You see it forming. The setup is clean. Everything lines up. And somewhere deep in your chest, a voice starts whispering, then screaming. If you don't get in right now, you're going to miss it. That moment, right there, that is where trading accounts go to die. Let me tell you about Marcus. Marcus wasn't a bad trader. In fact, by most measures, he was a good one. He had a system. He had rules. On paper, his strategy had a solid win rate, consistent enough that his mentor had full confidence in him. So one afternoon, his mentor called him. Marcus, I've been watching this setup build for weeks. This is the one. I need you to hold it for 4 months. Don't touch it. Don't adjust it. Just let it breathe. Marcus agreed. He took the position, and almost immediately, it started working. Month 1, he's up $180,000. He's walking around his apartment like he owns the building. He's already mentally redecorating. Month 2, the trade reverses. Hard. His $180,000 gain shrinks to $90,000 overnight. His palms are sweating. He's checking his phone every few minutes. Sleep? Gone. Month 3, the trade grinds sideways. No clear direction. Just noise. Marcus is exhausted, anxious, and convinced the opportunity is past. Month 4, he's still in profit, barely. Up $40,000 now. And he decides he's seen enough. He closes the trade, takes the $40,000, tells himself he made a smart, disciplined exit. 3 weeks later, he opens his charts and feels physically sick. The asset had exploded. The setup his mentor identified had finally fully played out. Right after Marcus exited, the 4-month target would have returned him just over $2 million. He walked away with $40,000, not because the trade failed, because Marcus failed the trade. His impatience didn't just cost him money. It cost him a life-changing amount of money. And the worst part? The market never moved against him. He moved against himself. Here's what nobody wants to say out loud. Most traders don't lose because of bad strategies. They lose because they cannot wait. Impatience is the silent account killer. It disguises itself as instinct, as smart risk management, as reading the room. But underneath, it's just fear wearing a suit. In this video, I'm not going to tell you to just be more patient. That's useless advice. You already know you should be patient. The problem is you don't know how. So I'm giving you 8 concrete pillars, real, actionable things you can implement to permanently rewire how you wait, how you hold, and how you trade. These aren't motivational quotes. These are the tools that separate traders who build real wealth from traders who just keep the market funded. Let's go. Step away from the 1-minute chart. The 1-minute chart is a trap. It doesn't show you the market. It shows you the market's anxiety. Every twitch, every micro move, every meaningless fluctuation blown up to terrifying size. Watching it is like putting your ear directly on a beehive and trying to understand the hive. All you hear is noise. All you feel is panic. Every time that candle flickers red, your brain registers it as a threat. Cortisol spikes. Rational thinking shuts down. And before you know it, you've exited a perfectly good trade because of a 3-minute dip that meant absolutely nothing. Shift your focus to the 4-hour or daily chart. These time frames filter out the chaos and show you what actually matters: the trend, the structure, the real setup. A 15-minute pullback on a daily chart setup is background noise. Stop treating it like a siren. Patience is built on clarity. Clarity doesn't live on the 1-minute chart. Set it and walk away. The moment you place a trade with your stop loss and take profit set, your job is finished. Read that again. Your job is finished. Everything you needed to think about, the analysis, the entry criteria, the risk, you did all of that before you clicked the button. That was you at your most rational, most disciplined, most objective. Every second you spend watching the trade after that is a second where your emotional brain is looking for reasons to override your intelligent brain. You'll see a small red candle and convince yourself it's the beginning of a reversal. You'll talk yourself into closing early just to be safe. You're not being safe. You're being impatient. Set the trade. Set the levels. Then go live your life. Go to the gym. Cook a meal. Call a friend. Let the edge play out without your interference. The market doesn't perform better because you're watching it. Trust the version of yourself who made the plan when the pressure was off. Risk management as patience insurance. Here's a reframe that changed everything for me. Most traders think about risk management in terms of money, how much they could lose. That framing creates fear, and fear creates impatience. Try this instead. Risk management is your patience insurance. When you risk 5% of your account on a single trade and it loses, your brain panics. It goes into survival mode. Your next trade isn't strategic, it's desperate. But when you risk just 1%, a loss stings, but it doesn't break you. You can breathe. You can wait for the next proper setup without the pressure of needing to make it back. The 1% rule tells your nervous system, we are safe. We can afford to be wrong. We can afford to wait. And that psychological safety is the foundation of genuine patience. Protect your capital, and you automatically protect your ability to think clearly. The opportunity cost filter. Before you enter any trade, ask yourself one question. If I take this mediocre setup right now, will I have the capital and the mental focus to take the A+ setup when it appears in 2 hours? Honestly, answer that. Because impulsive trades don't just cost you money when they lose. They cost you focus, energy, and emotional bandwidth even when they win. You walk away from a small, sloppy win feeling unsettled, distracted, already second-guessing your next move. And then the real setup appears. The clean one. The high-probability, high-reward one. And you miss it because you already spent yourself on crumbs. The trades you don't take are often your most profitable decisions. Learn to see skipping a bad setup as a win, because it is. The successful no-trade session. You sit down. You open the charts. You scan everything carefully. You apply your criteria. And you find nothing. Here's where 99% of traders break. They manufacture a reason to enter anyway. They lower their standards just enough to justify a click. Don't. Instead, embrace what I call the successful no-trade session. You sat down, you did your analysis professionally, you applied your checklist, and your conclusion was that no setup meets your standard. So you close the screen. That is a win. That is professional execution. Your brain needs to learn that inactivity is not failure. Waiting is not weakness. Some days, the most profitable thing you will do is absolutely nothing. Every time you close the charts without forcing a bad trade, you win a psychological battle that makes you stronger the next time. Build a trading time block. If you're checking charts from the moment you wake up until you fall asleep, you're not trading. You're obsessing. And obsession breeds impatience. The fix is simple. Give trading a defined time window and nothing more. Pick the 60 to 90 minutes when your market is most active, the London Open, the New York session overlap, whatever fits your strategy. During that window, you are fully locked in, focused, and ready to execute. Outside of that window, the charts are off limits. Your time belongs to your family, your health, your mind. The market will still be there tomorrow. Your mental clarity might not be if you spend 14 hours a day burning it up on screens. This structure rewires how your brain relates to trading. Inside the block, sharp, focused, ready. Outside the block, calm, rested, human. The all-day grind doesn't make you a better trader. It just makes you a more anxious one. Trade the checklist, not the feeling. Think about a pilot preparing for takeoff. That pilot has thousands of hours of experience. They've done this hundreds of times. And they still run through a pre-flight checklist every single time. Every switch, every gauge, every system. Not because they're incompetent, because they understand something critical. The feeling of confidence is not the same as confirmation. You need a trading checklist. A written, physical list of every criterion your setup must meet before you enter. And the rule is non-negotiable. If even one item isn't checked, you don't trade. 95% isn't enough. You wait for 100%. Because you at the desk, heart racing, watching a candle move, that's not your best self making decisions. Your best self wrote the checklist when everything was calm. Let that version of you run the show. Marcus didn't lose because the market beat him. He lost because he couldn't wait through discomfort. He let 2 months of sideways price action convince him that a winning trade was failing. And he paid nearly $2 million for that impatience. You've been Marcus. I've been Marcus. We've all exited early, forced entries, revenge traded after losses, and watched the big move happen without us. But now you have the framework to change that. The 8 pillars of patient trading. Step away from the 1-minute chart. The 3 strikes rule. Risk management as patience insurance. Set it and walk away. The opportunity cost filter. The successful no-trade session. Build a trading time block. Trade the checklist, not the feeling. Your edge isn't your indicator. It isn't your strategy. It's your ability to wait when everything in you is screaming to move. That's the skill. That's the difference. If this video opened your eyes, hit the like button and subscribe. Drop a comment below. Which of these 8 pillars are you implementing first? I read every single one. I'll see you in the next one.